going on here? TK, can you hear me?
Are you in bed? Didn't you get the itinerary? We're going to see Nolan in Calgary today.
I thought I was in Calgary.
Are you?
One moment, please.
Hold on, Darryl.
Look.
Teleport. Calgary's beautiful.
Man, is this nice? I can't
Hey?
wait. Can't wait to really.
Like lots of buildings, a little
TK.
miniature CN Tower thingy.
Yeah, everywhere has a little miniature CN Tower thingy.
That's the way to go up, cheap way to go up.
CN Tower thingy. Is fair. Man, do we have anything going on in real estate right now, or is it just like everybody's looking around at each other going like, what are you up to? You pretending to be busy too? Yeah, I'm pretending to be busy too.
What I like the most right now is just how much this environment creates better agents, right? Like it's so obvious to me how everything's changed, right? Like the communication I have to have with the clients, the preparation that I have to do, the evaluation of pricing I have to get into. Like I was doing one this morning, and it was just like I had to get into so much details to be able to go over the pricing. I was going over like years worth of data because it was just one of those situations where they really needed to understand that things weren't the same anymore. And before it was just like, look, we're going to go on at $9.99 and they're going to do an offer date, and you can expect anywhere between 1.2 and 2 million. All right.
And I can't even tell you where it's going to land because nobody knows.
Even today, no one's going to pinpoint pricing, but
round and round she goes.
The main thing is like there's better agents that are being created, and buyer agency. Wow.
But
I noticed the
biggest.
What
about the deal that we're working on? How's that agent looking right now?
Well, let's not talk about that.
That's ridiculous.
But buyer agency, like I'm going out with the buyers. I'm like, giving them like shoulder massages in between showing, like, you guys want to ride? You guys want to stop for food? Do you need me to invest in your TFSAs? Like, what do you guys need?
Is that a better agent? Is that how better agents behave?
But
you want to go play golf on Friday?
But like, you going to golf? Do you guys want do you golf? Do you go on vacation? Do you want to use my Aeroplan points? But like just the buyer agency stuff, like we're going to see more properties. We're educating the buyers more. We're looking at the market conditions a lot heavier. We're scrutinizing the houses a lot more. We're staying in there longer. There's just so many added benefits to agency relationships, whether on the seller or the buyer side in this market. And it makes me feel good, to be honest with you.
But you are not typical, and the typical ones are not doing that. They are.
I think all the good ones are.
Yeah,
there's a lot of good agents in Toronto. There's a lot of good agents in real estate, period, all across North America.
Yeah. Well, listen, we have a great guest for you all today. For all you great realtors out there that are watching the show, we love Mr. Nolan.
What is this? He's no longer accepting.
It doesn't like
things I can't change. I'm changing the things I can't accept. What is that last part?
The last part. I can't tell what it says.
He's changing the things he can't accept.
Can't accept.
Yeah.
I'm no longer accepting the things I can't change.
Yep.
I am changing the things I can't accept. Ooh, okay, we got it.
He's a leader.
I left that there for you just so you can read it.
Profound. Thank you. The boss is here
in all areas of his life.
The boss is here.
God.
Not only
TK and Darryl, the Canadian Real Estate Show. Congrats,
Thanks
man.
To you.
It's going well, hey?
It's going well.
No, you guys already had it planned. I just pushed it over the edge.
We're trying our best to just get out there and get in front of people. And man, Darryl's got us here on a beautiful Sunday morning. And
we flew all the way out here to
recording for our show today, releasing it live at 4:00. Every Sunday, 4:00, we've had an episode air for years.
Yeah, no, for like 2 years.
Yeah.
Maybe a little more. Since the word you can't say or you lose all kinds of views happened. What a crazy business. But look
Yeah.
at
No
you are
kidding.
like, you are technically and officially the GOAT of the Canadian real estate YouTube scene. You have more subs than anyone.
I don't know. You and Steve keep telling me that, but you know what? It's been a long haul, long journey, and it just keeps growing. And that to me says we're doing something well. By the way,
You,
I love what you guys were doing last week with your live there. That was wicked.
yeah,
Yeah.
we would love to have you
We'll
be
get you on
part
the
of it
next
on
one.
the next one for sure. You
Absolutely. I was traveling that day that you did that. I was literally in between Edmonton and Calgary at the time you were doing it, but I'd love to do it the next time you have an opportunity for sure.
absolutely. Yeah, it was a
And
whole bunch of fun.
and it was a great discussion. I mean, you guys talked about everything from pre-construction to the market where it's going. I loved how there was some diverse views on some of the things. It was great.
Yeah, we had a lot of fun. This episode is brought to you by Landlord.
This landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer. We had a lot of fun.
That's the intent, right? Is just kind of like bring people on and just like hope something comes of it. Darryl was trying to be the instigator. He was trying to just get underneath. He was like, I'm not a realtor and I've got all these views.
That's right.
We got him pretty good. We made sure, but you coming on there, Nolan,
They held on tight.
that'll be a nice compliment to some real estate chatter.
Yeah, absolutely.
Absolutely.
And I'd love to do it with Tom's story as well. I think that would be amazing. He's, by the way we got connected, right? So
100%. Tom
yeah.
was also invited to it. He was very busy. There's a few other great ones on the list. Yeah, listen, you guys are busy, so we're gonna have to figure out how to get everybody all rung up at the same time. Actually, I'm heading out your way next month, so I don't know if maybe, we can connect for a coffee or a beer or something like that. But
absolutely,
I'm
you tell me when you're in town,
baby. Yeah, I'm
oh
excited.
nice,
Yeah,
amazing. Are you going vacationing? Are you going for work? Or
yeah, well, I'm going on vacation, but I'm sure to work while I'm there. I'll definitely be looking at real estate. That's for
How
damn
far is
sure.
Banff from Calgary?
Like
Nice.
an hour and a half drive, I think.
yeah, so I'm on the west side of the city. It's literally 55 minutes out my back door.
Awesome. And I'm landing in Calgary.
Yeah, well, we'll definitely hook up, whether it's in Calgary and Banff. I don't mind going to either place. So
Yeah,
I'm in one and I can go to the other pretty easily. But yeah, let's do it.
That's awesome. That's awesome. Now, thank you for watching our last video. I always watch your videos, and I love what you were talking about, and I think it's very important that we discuss it even further without the constraints of a 8-minute video.
Okay.
But really, like, and I've been saying it for a while. If I go back, I don't even know how many months. Like, let's hold appraisers and the people that should be accountable for at least their part in the mess that we're in, right? Because I mean, you touched on it, but the reality is that, I mean, look, all of us in the system are abusing the system to our benefit one way or another, and that's just kind of how the system works. And some people are smarter than others, but like, appraisers should have to justify what they are producing, and they're really designed to be that mechanism that stops the greediness, doesn't play part to it. And it's really easy for them to do, in my opinion. And I know, if you do what everybody wants you to do, you're going to make more money, right? So that leads to the next problem, which I tried to draw out in that conversation as well, as the incentives all around are just completely fucked. So I'd love for you to kind of maybe elaborate on what I'm talking about from your perspective as a broker dealing with that whole situation, right?
Yeah, totally. So, I mean, the video you're referring to, we talked about an article that came out by BNN Bloomberg, which I think was probably a little bit of a fringe outlier sort of article, only media outlet that picked it up. But what they're talking about was two scenarios. The first, that were causing distressed sales, and the first was purchase or sellers, or sellers who had already lined up a property 3-6 months ago, were in the position where they now had to sell their property, and all of a sudden the values had dropped out, and the equity that they had to purchase their next property that they had already bought had essentially vanished due to lower housing prices due to higher interest rates. And then the second piece, and this is the piece that the BNN Bloomberg article really focused on, was the piece with respect to people getting appraisals, and the appraisers, or in the appraisals not coming in at the values. So I think the example they used was $930,000 purchase price, and the property appraised 2 or 3 months later for $800,000 and then $740,000, which led the bank to not want to lend. And this is like, first and foremost, a completely preventable problem as long as you are getting the appraisal done at the time that the mortgage gets approved. And if you have, there we go. And if you have a competent mortgage broker or a competent lender, they're going to make sure that this gets done. Now, banks, in a lot of cases, we've seen them hold off on getting their appraisals done. We've seen brokers hold off on getting their appraisals done because it's never been an issue before. This is something that in the Calgary market, we could see in 2007. We saw it again in 2014. So for us, it's like, we know that when the market turns, it can cause appraisal issues. So we always make sure we get those appraisals done up front. But here's the thing about appraisers is, for the last 10 years, appraisers have had their industry disrupted in a way that very few people realize has happened outside of the mortgage broker industry and outside of the appraisers themselves. And what happened is, there's two companies, now I believe there's three, that kind of came in and disintermediated the appraisal system, where basically they went to all the banks and said, you need better data, you need blind appraisal choosing. So in other words, you need a system that just randomly selects appraisers so that broker or a banker can't pick their favorite one and get a value that is way over what it should be. And they came in and they put technology in place. And as a result, what ended up happening is you had appraisers who went from typically receiving $300 to $500 per appraisal. They started receiving $230 to $350 per appraisal, and it basically chopped off 30 to 40% of their income overnight. Now, in a normal market, they're just having to do more appraisals and it sucks for them. But then we get into this market of 2021, 2022, and all of a sudden it's a boom in the appraisal market again, because they're now having a ton of people request appraisals. They're getting more business, they're getting super busy, and now they're starting to have a little bit of control over their incomes again. And what that essentially did was it created a scenario where, one, it was really hard to get an appraisal done quickly. Like we had an appraiser, we used to, and she watches my channel, but she may see this, but she used to be able to get an appraisal done next day for us all the time. And she always kept a spot open for us every single week. During the pandemic here in 2021, 2022, it was like, she might be able to get one done in a week. When we were dealing in other markets where we didn't know appraisers, it was, oh, we're 2 weeks out or we're 3 weeks out. And if you need it right away, we're going to charge you an $800 rush fee or $1,000 rush fee. And they really started taking advantage of the fact that the market was busy. And, I think this is a product, one, of the fact that they've gotten beaten up for so many years. And now this was their opportunity to make some money again. So they did that. Now, with respect to the appraisal amounts, they do have to justify their appraisals. In fact, the rules that they have with respect to appraisals and the comparables that they use are very, very strict. So if you get an appraisal, there are ways that they can be tweaked. Like you can find different comparables and you can make a case for your property. Maybe the appraiser missed something, but for the most part, across Canada, they're usually generally pretty accurate. Where this BNN Bloomberg article was pointing out that people were having appraisals that were coming in $100,000 or $200,000 below what they purchased for. Well, what was happening there was simply the appraisal wasn't ordered at the time of purchase. And then you've got this gap between time of purchase and the appraisal where the values dropped. And that's the problem. It's not so much the appraiser's fault. It's probably the lender or the mortgage broker's fault.
Well, but hold on a sec. Let me just cut you off. Because I mean, you're definitely partially right. But there's the other side of the coin here where on the way up, somehow justifying purchase price of a house that was $100,000, like the closest comp last week. Now all of a sudden, yeah, oh my God, your appraisal, it's amazing, came right in at 1.8, even though the previous comp was 1.7 a week ago, or maybe even a day ago. That cascading effect had to have been stopped at the very beginning when it was like, hold on a sec, this house is not worth 1.25. It shouldn't be worth 1.25. That last one wasn't worth 1.2 either. But then we start getting into it's worth what people are willing to pay, right?
Yeah, so I mean, I can shed some light on that as well. There's different types of appraisals for different functions, right? So if you're going through a divorce scenario, that's one type of appraisal, and the appraisers look at a property differently based on the fact that it's a divorce scenario. If you're getting an appraisal for a private lender, they'll typically appraise it based on a quick sale, so a very, very short time frame of sale. When you're getting a and this is really just comes down to timelines, right? The appraiser is not only looking at the values, but the timelines and the urgency of a sale having to happen dictates the value of the property to a certain extent. So what's happening when you see those run up in prices is they're doing appraisals for the purpose of supporting the value. This is a specific type of appraisal that is done for the purposes of a mortgage. And what happens is the price that you pay on the day for a property. So let's say you're in a market where it runs up and the housing price, and you pay $100,000 over ask for that property. Well, you've now established the value for that particular property, and in a lot of ways that area. So then what the appraiser's job to do is to go and support the value that you paid. And one way that they can do that is they can say, okay, well,
you paid it.
Yeah, you paid it, and go back to Mr. Listing Realtor. Hey, how many offers did you have? Well, there was 19 offers, and 5 of them were within this price of within this range of $5,000 to $10,000 of what we actually accepted. And then you've got a supporting value, right?
More importantly, too, though, right? Nolan, correct me if I'm wrong. Is a lot of the time these appraisals are also happening weeks later, and there's other sales in the neighborhood where a buyer sees that Joe Blow just paid 1.25 and the next one comes up at 1.2, and there's 16 offers instead of 19, and so that guy pays 1.3. So now the appraisal, when it comes in, at the time of purchase it was the highest and maybe it wouldn't have appraised, but now at the time of appraisal there is supporting data, right? And that's the issue, right? And it's the reverse of that today. Why is it at the time of purchase? Maybe at the time of purchase, it was worth $1 million on April 16th, 2022, but now it's May 31st and we're doing the appraisal now, and there's been sales that are lower. So we've got to appraise it based on the most recent data.
Yep, totally. And when housing prices are rising, it doesn't matter when you do the appraisals, but when they're coming down, that's where you have that exposure. And that's what these people are feeling, is that exposure to the fact that their appraisal wasn't done the day they bought it. It was done a month or two later. It sucks.
My thing is this,
Didn't they start appraising later because they were waiting for the value to catch up to it when the market was heating up? Like people would wait.
A good mortgage broker would do that, right?
Yeah, for sure.
If your clients paid a high price, then you'd want to appraise it as late as possible, right?
Yeah, I mean, there's no reason to do that though, again, because in that rising market. So let's say February, in that rising market, the price that was paid was the price that was paid. And they could, in all likelihood, support the value, especially if they're in competing offers.
But if it wasn't, again, correct me if I'm wrong, this is your industry. If it wasn't, and you did it, let's say 30 days later, and there was still another 30 days before closing, would the strategy not be, let's do another appraisal in a couple of weeks to see if we can get that number up?
Yeah, you definitely could. There wouldn't be a ton of reason to do it unless you're going to try to finance for more than.
But if it was lower, like if the shortfall was there, the client couldn't do it, then a strategy of a mortgage broker could say, you know what, let's let some more data come in a couple of weeks, and then we'll redo it again, right?
Yep, definitely.
It'd
be rare for it to happen, but it's doable. Yeah,
for sure. I agree. Darryl, your point, Darryl, is there's a conspiracy going on, and
no, I think there's a problem with the policy around it and the regulations. Like I think the way that they have to look at it, just because somebody's willing to pay for it because they're desperate and crazy in a super booming market, like the mechanism for safety disappears completely the way that the rules are written.
But this is my understanding, and this is what Nolan's saying right now, I believe, is he's saying it's based off the facts. and they're going to appraise it based off of the data that they have available. And there's a very consistent method across Canada that's used. So my question to you, Nolan, is because what I feel is happening, and it sounds like I'm wrong, is that now because the market is going down, that people are appraising things even lower than what the data is, anticipating that it's going to be even lower by the time closing. Are they doing that? Are they being more conservative in this market?
Well, I hope they're getting more conservative. That's for sure. But yeah, I mean, the appraisal is good on the day that it's done, right? And
so you feel they're being accurate, and it's not like, again, they're not saying like, I don't want to end up in court over this and have to, swear my testimony about this value. Yeah. So I think it's $1 million, but I'll do 980 just to be sure.
Yeah, and that's exactly the thought I had at the moment when you said that was, yeah, there could be some trying to escape liability, and maybe being more conservative on the appraiser side. But at the end of the day, like, they all have errors and omissions insurance, and they all know that. And, as long as they're not negligent and reckless, if they get sued over the value of the property and they can show that they had the comparables for it, it's not really a game where they should be getting into too much trouble. I don't know. It's interesting. I think everybody's running a little bit scared right now. And I think that's probably includes the appraisers, right?
I would be, right?
Sure.
Yeah. I want to make sure that it never came back to me and jeopardized my livelihood and stuff like that. And that's just human nature.
Right? Yeah, totally. Question for you guys. One of the things that was pointed out in the comments of that video on my channel was that some realtors are suggesting that they have an appraisal condition put into the purchase contract, which the appraisal has always been part of the financing. So it's always been part of that financing condition. And if it's done within that 7 to 10 day financing condition window, it's a non-issue, right? But is that appraisal condition?
It's an optics thing. So it's like, hey, look, we're good. Fine. I've never used it, and I don't think I've seen it in a contract for years, but I know it exists. It's an optics thing. Hey, I've got my financing, we got credit, we got down payment, we got income, we got all that type of stuff, but we just want to make sure the appraisal's coming in. So technically in court, if you were to go there and you were to say, I backed out because, my financing was in place, but the appraisal didn't come in, but you could still technically afford it. You could have like a case where you're not acting in good faith. So it's more about just saying like, look, if this appraisal doesn't come in, I don't care if I'm still able to afford it because I have a big enough down payment to cover it. I want to back out of this deal and get out. Again, not common. It's just an optics thing. And to me, it's redundant if you ask me. But
I mean, from a seller's perspective, right? If I get asked to accept that condition on an offer, my first thought is, why would I accept that? Because if the price is the price today, and I'm not going to let you be subject to an appraisal 25 days down the road and have that risk a bunch of my equity. But I also don't want that person choosing the appraisal or the appraiser, and then saying to the appraiser, well, we want the value of what it would be in a quick sale scenario where they had to sell it in 30 days and therefore get a significantly lower value, and then try to negotiate down the price, right? Like the old.
It would be a 5-day condition. So again, it would be the exact same as a financing condition, and it's a redundant way of doing it.
Yeah, so it doesn't make any sense. Okay.
No, well, I mean, it makes sense if you're throwing out 1 million offers out there trying to, score a deal.
I've had people do that even in good markets because they are concerned. These are like higher end clients, and they're concerned about values in certain areas and stuff like that. And I've kind of coached them on that. My advice is we put in a financing condition and just make sure that during that time we have the bank order an appraisal, and then you can decide if you're comfortable or not during that time.
So, but technically you could get your financing. You just may have to like pony up a bit more money or have a higher rate, or like you could get your financing on it. So, I mean, it's not the stupidest thing to throw out there, because you could get your financing, but just not be happy with the deal.
Yeah.
How does that work?
The clause is written in a way to be able to confidently not proceed with the offer, right?
Yeah, I think that depends on the market, right? Like in Alberta, the financing condition is now satisfactory financing to the buyer, right? So that, like, if they can't get that extra $20,000 that they wanted, they have a way to walk out.
Yeah. I was going to say, like in Saskatchewan and Alberta, it's very different than throwing.
I'll give you guys a story. Sorry, Joe. My brain works fast sometimes. So this morning I was at a house, and it was the ladies from England. So this is how it works in England. So apparently it's different in the UK, and only in England it's like this. She's from outside London. She said, you go and you make an offer, and there's a point of exchange that could be months away before the actual closing date. And so let's say you come in and I say, Nolan, I want to buy your house. It's £1 million, and the date of exchange is July 15th. So now between now and July 15th, I have the opportunity to back out and do anything I want. And between now and July 15th, you can come in and say, I've got another buyer. So even though you've got this set up where it's like, I've got an agreement with you and we're supposed to sell for £1 million and it closes August 31st, but during this exchange period, anything can happen. And she used a word that I can't even try to repeat right now. It was definitely a made up word, like a jargon type of thing there. But basically you've been like, pushed out of the situation. And so anybody who says like, I got, I don't know, bamboozled or whatever, it means that the seller knocked you out and took on another buyer. And when they close, they have like 20 different closings of buyers all on the same day. And everybody's got the same issue, which is I need that money from that guy to get that guy, that guy. And it's this big, long chain reaction. And it's the most messed up system. So even though, Darryl, this system's not great in Canada, there's worse systems out there. So
that's for sure.
Yeah.
Yeah, it must not be easy buying like one of those tin huts in the deserts. That has to be tricky. How do you get title?
I think you just drop your tin hut and then you live there until somebody tells you that you can no longer live
That's
there
right.
anymore.
Just collect pieces of tin in one place.
Yeah.
It's funny. I look at the New Zealand market right now, and like houses are not selling at auction, and Australia and New Zealand have a auction based system, which is ironically what the Canadian government and BC government want to put in place over and above our blind bidding system. And now they're getting to the point in those two countries where nobody's showing up for the auctions. Like they can't even sell the properties at auction anymore. So it's interesting that, Canada's real estate market is unique in a lot of ways. And the US system is similar, but you go anywhere else in the world and there's a lot of jargon associated with it that a realtor couldn't drop into another country from Canada and go in and sell houses elsewhere.
You wouldn't want to. You wouldn't want to. It's very lucrative here, the mortgage and real estate industries compared to the rest of the world.
I don't even know how people can go from one market to the other here. I mean, from just interviewing people across the country, there's so many nuances locally, and the vast difference between provinces is just absolutely insane how their markets behave. That like, how can a guy from Ontario, I mean, not even forget even Ontario, a guy from Toronto even work in the outskirts of Ontario, let alone Saskatchewan or Vancouver, right? Like there's.
Wait till you come to Banff. 55 minutes from Calgary, 15 minutes from Canmore. The Canmore market operates significantly different than the Calgary market does. There's 3 real estate boards in a town that maybe has 35,000 people. And the Banff market, which is 15 minutes further down the road, operates even more completely differently than that. And then we got guys that want to go across the country and open up everywhere. I tell you, like, having YouTube become a success, and then opening in Ontario and Saskatchewan and BC, we learned a lot about mortgages really, really fast in a really short period of time because all these markets operate so differently.
Is it competitive in Canmore? And is that what you were saying? Like it's ratio of.
What's the difference between how they all operate, those 3
so
areas?
It's competitive, first and foremost. Calgary Realtors, so everybody in Alberta has the same license, just like they do in Ontario. So Calgary Realtors like to go out to Canmore. And if a Canmore Realtor gets a call from a Calgary Realtor for a showing, they do pretty much everything they can to make it hard for that Calgary Realtor, or even more so if a Calgary Realtor is trying to list a Canmore property. Then they've got 2 or 3 different boards that they've got the properties listed on, including their own local listing database. So if a Calgary Realtor is trying to get access to that Canmore market, there's certain listings that they can't see because the Canmore Realtors like to keep it that way. Mm-hmm. There's also a whole bunch of like zoning stuff, like mine shafts. If you want to buy a property for Airbnb, like don't even bother in Canmore. If the municipality finds out you're doing it, the tax rate goes up tenfold. And you got to know where the mine shafts are. You got to know where all the stuff is. And then You go further into Banff, another 15 minutes down the road, and that's a national park. Well, you don't own the land in a national park, but you can buy a house in the national park. But there's all these rules about what you have to do, including living there, in order to own in the national park. But then they've got guys that lease small offices in Banff on like a second story of a commercial building. And these guys have like an office in Banff just so that they can have a recreational property in Banff. Because you can't live there or own there unless you work there. It's crazy. And the guys in Canmore who know the Canmore and the Banff market, like there's a guy named Chris Vincent who works for Sotheby's. Like he's a walking encyclopedia of the area. It is phenomenal how much he knows. And it is also, it is so scary how much he needs to know to operate in those two small, tiny markets.
Daryl's going to look him up and just get taken on a tour of houses in Banff.
Well, I can't find anything else to do there. Like I went online and I was like, what's there to do in Banff? And
absolutely nothing.
Not much came up.
Really? There's nothing to do in Banff? This is like such a iconic destination. Like, what do you mean?
If you want to like walk a lot, then there's so
much
to do.
What can I do if I had a canoe?
If you had a canoe, you could
do.
Yeah, there's a lot of stuff to do if you like
go to
to
Lake Louise.
Maybe. I don't know. I'm not in charge of the schedule.
We'll make sure you get some good tips, but who is it? Your wife who's in charge of the schedule? Is that
No, it's one of our friends. We're going with another couple. So she's taking the bull by the horns, so to speak. Yeah.
There's so much to do. I mean, hiking, gondola to the top of the mountain. There's kayaking. You can, go out and ride the Banff Parkway, which is, it's unbelievable.
I want to get ATVs. Go buck choy on some ATVs out there.
That you will not do in Banff.
Oh, that's
I knew that. It didn't sound right.
National Park.
She told me. Damn.
You can get like a pedal ATV.
Well, we're going for vacation.
Like a bike, but you sit down. It's like a recumbent bike.
Maybe I'll get to relax while everybody else is looking at nature.
So Nolan,
you'll love it. It's amazing.
You're doing a lot of business in Ontario, right? So right now, are you seeing a lot of deals have issues with the appraisals and closings and stuff like that?
No, we operate like we're in Alberta. So we've always made sure those appraisals get done right away. So, I mean, we aren't having those issues, and we haven't had those issues yet, knock on wood.
So my next question would be, have you had any delay or pushback from the banks on the timing of the appraisal? Are they saying, no, we don't want to order it yet, closing's not for 90 days, we want to order it closer to closing?
No. If we get it right away, they take it.
The underwriters are like, no problem, you submit it right away.
They want it done, right? They want it done. They want it off their desk. It's like if they got to wait 90 days for that appraisal, that's one more file that's open. They want that thing complete and gone as fast as possible. It makes their lives more efficient. It makes everyone's life more efficient. I mean, and also keep in mind that, we're probably being selective about lenders. So we're probably using more lenders that have an AVS system. So that's an automated valuing system. Which is basically a soft submit to like a CMHC or a Sagan Canada Guarantee. So we're smart about it that way. Like we know generally if we're going to absolutely need an appraisal, and if we know we're going to do that, we just pick the lenders that also allow us to choose our own appraiser, so we don't have to go through the appraisal aggregate systems. It's strategy, right? So we've got some more options, and we've got some more. So the ability to sort of, I want to say massage, but that's not the right word, but just strategically help the client pick the lender that's going to make it the least amount of a nightmare for themselves and for us, right?
What you just said to me would have saved people hundreds of thousands of dollars if they had gone with you when they bought that house in March or April, or even some of them in May are starting to have issues, right? It's like, people just don't, they think they can just go with anybody and everything's going to be fine. The mortgage brokers are all laxy daisy, don't worry, we'll get it done. This won't be a problem. Oh, appraisals won't be a problem. And I had 3 deals that the appraisals came in. One already closed. One's on an extension. One's supposed to close next week, and they're asking for an extension now. right? And the
Mhm.
same story, same song and dance. Can you cover the shortfall during offer presentations? We've got this many offers. We need to know who's got, who's most liquid. And oh yeah, we got it. We got business here. We got this. We got all these things. And we got big deposits too. So like, there's money involved. But of course now, it's coming through. So yesterday I finally got on the phone with one of the guy's mortgage brokers, and he's like, we need 30 days. And I was like, 30 days. He's like, yeah, we need 30 days. I said, like, what do you mean? Like, don't you want to like at least explain to me what happened? So I said, like what happened initially. He says appraisal came back, whatever. And I said, okay. I said, well, like based on what I'm seeing, it shouldn't have come back that much. He said he had a certain amount put together. He said, well, no, the appraisal amount is too much for him to cover. So I said, okay. I said, so what's the next strategy? Why should we give you an extension? Why is it that this is not going to be a problem this time? He's like, oh, we're going with RBC. We know that we're going to get the appraisal done and we need 30 days. I said, so why would we need 30 days? I said, why can't RBC do this in like a week? Like, what's going on? Tell me, because now you're gonna have to order another appraisal if you're changing lenders. He goes, oh, well, we're not doing the application until we know that we've got the extension in place. And I was like, all right. I said,
So the broker was sending the deal to RBC? Or was it an RBC mortgage specialist?
you know what? Good point. The guy that I was talking to, because RBC is, they only deal with the bank, right? They don't deal with mortgage brokers.
Exactly.
Yeah, so
they're like the
point.
biggest purchaser of non-bank mortgages in Canada. But yeah, if you want an RBC logo on your mortgage statement, they only will deal with you directly.
Yes, good point. So I wonder if he's just got a contact in the bank, or he's an RBC mortgage guy. It sounds like he's a mortgage broker, and he could be referring to somebody, which tells me maybe something shady's going on, right? But anyways, he said,
well, it tells me that he ran out of
options,
options, right?
Yeah. He says he can get it done. He's like, I just need 30 days. I said, I just had this conversation with 2 other guys in the last month. Both of them told me the exact same thing, and both of them caused me more problems. So I said, unfortunately, I don't believe what you're telling me as like face value, right?
Yeah, and I mean 30 days is extreme. Like I don't again, knock on wood, and I don't want to say this publicly and have everybody come to us, but because we just can't handle more than what we have. But like 5 days would be long for us to get an approval done and completed. We might have to wait for an appraisal for another 2 or 3, but to say we need 30 days, that tells me that it's probably not going to happen, and rarely does it when somebody asks for that long of an extension.
Yeah. You can wait so long.
Yeah.
Yeah.
And that's the thing too.
Exactly.
My guys don't.
You wait 30 days, you lose another $100,000.
Yeah. Exactly. And then you got to go back on the market and you find out that the house is worth even less, and you're suing the buyer for even more.
Yep. Totally.
Okay. So it's not the appraiser's fault. Fine. They're a piece of the puzzle. Mm-hmm. Now, I don't know if you guys have noticed this. I tried to kind of take poke at it a little bit on that live episode, but I mean, we have some of the most successful realtors in social media have gained notoriety through being a real estate bear, interestingly enough. And we have a lot of successful realtors that are bears, right? Well, I think people are confused if I'm a bull or a bear. I mean, some days I'm bullish and some days I'm bearish, but it's a very interesting thing to see a bunch of bears selling the product they're bearish on, and it not being a piece of this puzzle that we have in front of us right now. That doesn't seem to work.
Yeah, totally. I mean, it's a double-edged sword, right? Because the problem with social media and YouTube specifically is if it bleeds, it leads. So you kind of have to. So what I found in my videos is I have to have a really scary title and then talk in the video about why it's not so scary.
Not so scary.
But I mean, the risk and the fear is that you turn into like Garth Turner, who I'm not sure if are you guys familiar with Garth Turner? So I'm glad you are now. He was a member of parliament like way back 15, 20 years ago. And he's been calling the collapse of the Canadian real estate market for 15 or 20 years. And at some point he might be right, but he's been a bear for that long. And the people who have followed him have stayed out of the market for probably not just hundreds of thousands of dollars, but probably millions of dollars. Right. And, he gained a really big following by saying, hey, the market's going to collapse, and did it for a very, very long time. I'm not sure if he's still doing it. I think he probably still is. but yeah, that's the fear, is you end up being the guy who's always calling the downturn in the market. But anybody can go and look at a 100-year graph of the real estate market, and you can see there's blips on the radar. Same thing with the stock market. But in a long-term general sense, the markets continue to go up. So if you're always being the bear and calling the bottom, you're probably going to be right more often than if you say, even in a market like this, like it's going to continue to go up, up, and up.
That's
So is it
it's
the
a skill.
negative? But is
It's
it
think
is it the
about it.
negativity that the people that are watching are craving that they provide? Is it like a moth to a flame? Like, what is it? What is it about people that are saying the sky is falling forever?
Imagine the news. Imagine the news if it was just
Just the
like,
fear.
today a fight was broken up before it started. There was, an accident avoided tonight when the red light cameras failed, but luckily everyone was okay. That's not good news, right?
Yeah.
You got to report the stuff that's, oh wow, markets change. Oh wow, this, that, fights, kidnapping, all that stuff. That's
but
what sells, Darryl. You know that.
But let's just say you are a bear and you're bearish on the real estate market, and you have a client that's feeding your family or about to, and you like feeding your family. How do you, with good conscience, and I know that, other than that, realtors are just there to facilitate a transaction, and, like, people need to be protected from the system. The system, the way it's built, is a real mess right now. Realtors are incentivized to sell stuff. Brokers are incentivized to facilitate that sale. So like everybody gets fed by doing their job, which is how it should work. But the incentive side of things is making people do things that they may know are otherwise not the best thing for certain people.
Yeah, totally. I mean, there's definitely that incentive there. And I mean, all you have to do is look to the comment section to find people that believe that real estate agents are incentivized to just sell houses. I think the key thing for anybody in our industry right now is we've been looking at this market as a short-term market for the last 2 years. It's like, what's going to happen in the next month to 3 months? That's it. That's what we've been looking at. And the reality of a home purchase is not a short-term decision. It might be for a flipper. It might be for a speculator who's buying construction stuff. But for most people who are buying a home to live in, so 80% of the homes that are sold in Canada, it's a long-term decision. And if you start framing it from the perspective of the long-term decision, I think that changes the conversation, because does it matter if property values are going to go down by 1, 5, 10% if you plan on living in that property for the next 15 or 20 years? And you can go and you can pull up graphs of, going back to 2000, and just go back to 2007. And you can see that there's this spike in the market, and then there's this little blip that's the financial crisis in the US. And then here we are 14 years later, and housing prices are well above what they were at that point in time. So if somebody's thinking about the purchase from a long-term perspective, that changes the conversation about it. And then it also changes the conversation with respect to Mr. Buyer, Mr. Seller. Are you really concerned about whether this property goes down by $5,000 or $10,000 or $100,000 if you know that you're going to live all the way through that? Because obviously you need somewhere to live. And on the other side of it is, if housing prices can, go back up right away, you could sit here and wait for 3 to 6 months and then find yourself paying more anyways. So that's why I always say on my channel, it's really about buying at the time that you need to buy. Steve Karish says this really well. He says it's a needs market versus a wants market. And if you're looking at your needs and you're looking at long-term decision making, then I don't think it really matters when you purchase a property.
So people have an issue with what you said, Nolan, right? And that's why I agree with everything you just said, but people have an issue. They say, realtors, you should know the market's trending down. It's 3 months in a row. You should be telling your clients not to buy. They should wait to the bottom. You're just doing it for your own. And this is where Darryl's question is coming from. You're just doing this to benefit yourself and to feed your family. You don't really care about your clients and all that kind of stuff, right? But the answer I give is, like, what do we really know? Like, do we really know that the market's going up or down every 3 months? Like, how much information does anybody really have about the direction that the market's going to be in 3 to 6 months?
Yeah, I mean, I'm relatively certain that the people that provide the exact criticism that you described didn't buy in April 2020 and then sell in February 2022 for a massive profit, right? Like they weren't able to call the market.
They don't even
Nobody
own a
is.
house, Nolan. Come on. They're renting. They don't
Exactly,
own.
because they've been trying to call the market all this time.
Exactly.
Waiting,
Right.
listening to guys like Robert Kiyosaki saying that the whole system's going to crash and buy gold and blah blah blah. But I mean, there's good stuff in Robert Kiyosaki too. But I mean, the guy's been calling a crash forever, forever, forever. And look, it's not. They're not wrong, these guys. It doesn't take a genius to look at the current situation. I mean, we had I don't even know how many videos that we titled, like, is this sustainable? How long can this continue? And we had tons of guests going, like, I feel like it's cooling right now. And meanwhile, it wasn't cooling, but we felt like it was cooling because, you know, people didn't buy something for 2 days, or there was like a holiday, or who knows,
10
why we got
offers
locked
instead of
down all of
20.
a sudden. Yeah, but it's cooling. It's cooling. When it was at that froth, and everybody was like, man, this is fucking crazy. Like, how long can this keep going for? How long can this keep going for? You know, like if we were looking at a train coming at us and our families were there and people we cared about were there, we kind of like hold them back and go, maybe we should like not take a couple more steps right now because that train's going to destroy us soon. But nobody did that. Nobody did that except for the bears that have been crying for 30 years that the market's going to hell, right? Totally. But there's the flip side, because there's people that are out there saying like, go. Yeah. Well, don't worry. We'll get you the mortgage. Don't worry. Go. Like, you can afford it. Go. And it's not wrong. It's just like, there's some people that are saying that they actually are right. And then there's some people saying it to people and they know they're wrong. Like those people going for that crazy, ridiculous B mortgage or whatever, Brampton mortgage, right? But this is the facts, right? Like there's people going into stuff that everybody knows that they can't afford at every step of the process, right? Yeah. So how do we eliminate those kind of things from happening? Because like in a market like right now, we will start to see AMs get longer, right? Amortization periods get longer. We're going to see all kinds of creative trickery to keep payments in a place where they can be affordable so that people can keep lending out money and the machine can keep going, right? We'll see people getting more creative, won't we?
Yeah, I mean, on that fraud side of things, like the Brampton mortgage, by the way, the Brampton mortgage, for those who don't know, is basically Brampton's got developed a name for itself because of some unscrupulous people who basically faked job letters and pay stubs and basically got people mortgages for way more than what they could qualify for. Yeah, I think as people get more desperate, you're always going to see more stuff like that happen. I can tell you that stuff is getting caught more and more often right now. It's harder and harder for anybody to get away with that. Like, I don't think we've ever had a deal get through our company that had anything sort of fraudulent on it. But I can tell you that in the early days of 2021, when my YouTube channel was taking off, we had a lot of people try to get some by us, and we caught a lot of them. And if we didn't catch them, the lenders caught them. So yeah, I think that could potentially be a problem. And I think the message for people who are buying a house is just don't do anything that that gets you a house that's more than what you can afford, because that's just a recipe for disaster. And then from there, like, I don't know how you fix it. I really don't have an answer for that. I mean, it's everyone's got to do the best to not do bad things on their own, and you know, the people who do are just exposing themselves to more risk.
So if you don't eat because you say, guys, I really don't think you guys can afford this house, and I can't help you with this house. If you starve to death because of that, it's not an easy decision to make. Yeah. Right. So are there different incentives all around? Because it's the same because in that process, you've got at least one realtor that knows you probably can't afford it. You have a mortgage broker that's figured out you can't afford it. And you've got an underwriter who knows you can't afford it. And right? Like all of this kind of happens, plus a bank probably figured it out at some point. But
Mhm.
they have all these people that are incentivized to get that deal through, right?
Mhm.
Including the purchaser for some God knows God, like I don't know what their incentive is to get that thing. But you have all of these incentives in place that are driving this behavior, right?
Yeah.
If you were awarded maybe for saying, you know what, I think you should hold on a sec, and that was documented, and you just save somebody 150 grand by not buying that house, I don't know how that's possible, but there has to be better ways of doing this thing, right? Or
Yeah,
do
I
we just
mean,
keep going like it's monopoly and just those are the rules, let's fucking go?
I mean, if you're asking like from a realtor's perspective, what I think the best thing to do is, I think if you look at guys like Steve Karish, who, you know, we had that fake little feud on YouTube, but he's the first guy to tell a buyer, this is not the right move for you. You look at guys like Tom Story. You look at guys like Matthew Pfeiffer in Saskatchewan, who for whatever reason likes to come at me all the time with taking clips of my videos and stuff. But I mean, if I could take
saw
a guy
that.
like him and like the information he puts out, the integrity he has, and the way he approaches real estate, if I could take him and put him in every single market in Canada, like the real estate market in Canada would be a significantly better place. And my
And he would
experience,
just to point out, he would dominate in all those areas the same way because
yeah,
it's a free market, and that's a
totally,
service that people are looking for,
totally.
right?
And our experience with our mortgage company is like, you know, being the B Corp certification that we have, which is that certification around accountability, transparency. It's what Patagonia has, and it's what Ben and Jerry's have, and it's all about like using business as a force for good. We don't do those things because we have that certification. We have that certification because we do those things. And my experience is when we tell a client, you know, this isn't the right move for you, sometimes they get pissed off and they go elsewhere. But more often than not, they're sending their friends and their family because 3 to 6 months later, they realize Nolan and the Mortgage 360 crew saved me from making a really bad mistake. And you know, you might not feed yourself on that transaction, but you may end up finding yourself in a situation somewhere down the road where you're getting more business and feeding yourself more because you did the right thing consistently. And you know, I think that's the biggest thing for real estate agents right now, is just continue to do the right thing and ask a lot of questions. And if
The
you're
market,
asking the right questions,
will de-incentivize people from using
yeah,
those shady realtors, Darryl.
yeah. I
That's what
mean,
it
the
is.
guys
There's
who,
too many realtors.
yeah,
Exactly. So
We
right now
need
there's a
to-
shift, and people will leave the market, and people will now want a guy like Nolan doing their mortgage more than ever, because they'll come out of this hearing all their stories of their friend who went with the no-name guy at the bank or whatever, and they're going to come out saying, no, I need somebody who's going to have like a strategy to protect me. It's not just about getting a mortgage anymore, right? Same
totally.
thing on the real estate side too, right?
Yeah. And that's exactly the thing, is the guys who were just selling houses for the sake of selling houses and lying to people and all that stuff. Market turns, they're gone. Like they're going to have a hard time surviving, and people are going to start looking back to real estate agents going, I really need good advice and I need to make sure I make the right decision here. And that's in these down markets, that's where we start to find who the really great real estate agents are and mortgage brokers are. And that's who everybody flocks to, because it's no longer about find the guy who can get me the house. It's about find me the guy who can give me the best advice, because all of a sudden the market's turning. I don't know what's going on, but maybe TK or Darryl does. And that ends up being,
I don't want the kickback. I don't want the discount commission. I don't want the family friend. I want the best. And I don't want to
Exactly.
take any chances.
Exactly.
Right? And that's what it is. I had one of your videos, you talked about the Scotiabank adjustable rate mortgages with like I forget what it's called. And you have like a line of credit set up. Is that still something that you're recommending to people?
The step. I mean, I think that particular mortgage is probably one of the single best ways to protect yourself from you know, higher inflation and whatnot, just because as you pay down the mortgage, if you need to reaccess your equity, you can. Now that could potentially just be delaying the inevitable for most people, but if you can get that product, and like we have that product, and if you can get it and something happens where you lose a job, because let's call a spade, someone's going to lose a job here in the very near future. I mean, we've got external factors on inflation affecting internal inflation in Canada, which is affecting internal interest rates, which means at some point the interest rates are going to go high enough that it's going to affect the job market. And having that Scotia Step product and having that line of credit available, if you're smart enough not to use it unless you absolutely need to, I think is a really, really great feature, and something that could protect a lot of people.
Explain that again, just quickly. So you get a line of credit, but then it becomes part of your mortgage.
So the step product, how it works, if it's set up properly, it's not always set up this way. But if it's set up properly, what ends up happening is you pay down your mortgage. So say you pay $1,000 a month in principal this month, you get $1,000 available on a line of credit. And what that does is it makes it so that, let's say you lose your job and you've got $10,000 available on your line of credit, you can survive for a month and while you look for another job.
But you're borrowing your own equity back instead of more debt.
Yeah, exactly. I mean, it's still debt. You're still borrowing that equity.
That line of credit though, is it like, prime plus whatever, or does it roll back into your monthly payments?
It's prime plus a half.
Right.
You can get them to lock part of it into a fixed rate if you want to. So if you say I got 20,000 and I don't want it on line of credit anymore, you can lock it into a fixed rate, or you can get it flipped into a variable. But it's just a really, and BMO, by the way, so BMO has a product that's similar to it. RBC has a product that's similar to it. CIBC has a product that's similar to it. TD does. The reason I like the Scotiabank one is because their variable rate is an adjustable rate, so the payments change as interest rates change, so you don't find yourself in a negative amortizing scenario or with massive payments at renewal. So I like that product best. But if you basically got 20% equity in your house and you've got a big bank mortgage, you can usually get a similar type product at pretty much every major bank.
And so is there anybody that it makes more sense to go with a fixed rate right now than a variable?
I mean, if you just won't be able to sleep at night, I mean, we've got a bunch of clients that just locked into fixed rate mortgages, and they're gonna pay probably way too much, but because they're at variable of 2.75, it'll be 3.7 or 3.5 in come July, but they're basically.
He just played his hand there, Darryl. He says 75%, 75 basis points.
I know. That was my next question.
Ooh.
That was my next question. Damn.
With certainty.
No,
certainty. With certainty.
So they released the inflation numbers this week, right? 7.7%, highest since 1983. They reweighted the basket, included used cars.
Yeah.
Included used cars, which should have bumped it, came back and said, actually, the used car numbers wouldn't have affected inflation. And now you've got these even bigger numbers in May, which was not expected. There's no way that they don't go 75 basis points to match what happened in the US.
I had such a great lead up to that question. Damn, 75. Okay. TK, what do you say? You think 75?
I'm going to stick with 50, not because I don't think it should go up 100 basis points. I mean, we should be getting this up to
how much more
3%
broken
overnight rate as soon as possible. But
isn't that?
I just think that they're scared. I think that they're just they hesitate too much.
Have we even felt the rate hikes that have happened yet? Like, isn't the rule of thumb that you don't feel the rate hikes until like 12 or 18 or 24 months down the road?
Yeah, it definitely has a lag. There's also another rule of thumb, not a rule of thumb, but it's what's called a liquidity trap. Liquidity trap is when you get interest rates so low that when you do need to raise them, the effects of raising them are non-existent. So in other words, you lose control of money supply, and you can raise interest rates all you want, but it doesn't affect inflation. And that might be where we're at. And if it is, what that means is that they raise interest rates, kills jobs, kills growth, and then they have to drop them back down again, because they realize that they weren't able to do anything with it. And here's the thing, right? This inflation is a global issue right now. And I think we talked about this last time I was on, but it's a global issue. Like we're talking high energy prices. We don't control that locally, right? We're talking Russian war that has had an effect. A lot of people say it hasn't. It has, without question.
Yeah.
Who was it? Was it economist this week that said that that the war in Ukraine is factoring in a $30 premium to oil prices. So that's a significant amount of our inflation right there. That's something that we don't control. And then you've got the supply chain stuff where we've got China going back into lockdowns, and it's June of 2022, right? So we've got all of these things happening that Bank of Canada raising interest rates doesn't affects none of those three things, and those are three of the biggest components to our inflation right now. So then the question becomes what happens if we do increase interest rates, because we can impact the supply side of things, and that just means that we're going to suck out all of the demand in the Canadian economy, all the money that there is to spend. We're going to create some job issues, and we're already starting to see some job numbers come back in that are a little bit more negative. And we're seeing negative GDP growth, or close to negative GDP growth. At least we did in April. We'll see the May numbers pretty soon here. And at the end of the day, like we're finding ourselves in a situation where we're doing a whole bunch of things with interest rates that probably aren't going to have a ton of effect on inflation. So then, when things get really bad from a GDP standpoint and from a job standpoint, guess what happens? Probably have to have interest rates go back down.
Darryl and I both got our passports renewed. I got my son's passport renewed. He got somebody. Who did you get?
It's
Yours?
got over 100. No, it was my daughter's. It's got
Your daughter's, yes.
100,000 views. This thing.
Okay, so we had to get passports renewed the same day today. I mean, same day this week, ironically enough. So we're both getting our passports renewed, and I'm in a lineup with, there's about 300 people there. I was about number 150, so there's 150 before me, 150 people after me. All those people are going to be spending their money within the next 45 days because that was a requirement to be there. You had to have a trip booked. Interest rates aren't affecting the population in general. Yes, if you're going to go and renew a mortgage. Yes, if you're going to borrow for your business. Yes, if you need to borrow money today. But the liquidity trap, like you're talking about, is some people that it doesn't affect their life at all. They're not going to be borrowing money anytime soon. They have cash, they have money, they have job, they have security, and they're spending that money. And it's not going to change inflation anytime in the near future, regardless of interest rates. I think they know that. It's just about trying to scare people into making better decisions before we come into whatever economic crisis that we're going to be facing, which
a lot of it's optics for sure. I mean, it's going to have, we're probably going to see in July and August, it start to affect housing costs and shelter costs, just because all those rate holds will be running out, and then people will have to be buying property at 5% interest rates. So it's going to affect the real estate market a little bit, and that should start to pull a little bit off of inflation. But I mean, for the most part, like you're right, it's the consumer spending that's happening. It's going to take a while for those interest rate hikes to filter through, especially all the people who have 1.35 and 1.55 5-year fixed mortgages. Those people aren't going to feel these interest rate hikes for quite some time. And by the way, one of the things in one of those videos that those other YouTubers made about me is they say that, the people who are really going to win are the people that have 1.35 and 1.55 fixed rate mortgages. And believe me, when those rates were available, we had a lot of clients that took them. We weren't variable at that point because the variable and the fixed rates were so close together that the fixed rates really made sense. And those people, like I said, aren't gonna feel that inflation, that interest rate pressure anytime soon.
They definitely won't. So now the environment we're in, we've got rates going up, not really affecting inflation for everyday things that everybody needs. We have the floodgates opening on immigration, like students are flooding back to the country. There's nowhere for them to live right now. Rental market is going bananas. And on top of all that, all of the developers, not all, but the smart ones are putting the brakes on, right? Maybe they're getting stuff zoned, but they're not launching projects, and they're not launching projects for a while. I can tell you that, unless they absolutely have to. Like, this thing is on pause from a new unit perspective, right? Unless maybe you're in Calgary where things are booming, Bald Prairie, Matthew says that Saskatchewan is building like crazy all of a sudden. But like, what I foresee, and I don't know when, but like these big funds that people are raising, and these big companies that are looking to come in and buy up all of the housing here, the evil investors, like soon the environment is like ripe for people to start buying investment properties again, isn't it? Like when is the time right?
Yeah, I don't know. That's that question again. If we could all time the market, right? We already bought in April of 2020 and we would have sold in February.
Just flipped it this year. Yeah.
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 I don't know.
Like a hero.
I think you're gonna need, okay, so let's talk about the big fund thing real quick, because there's this perception in Canada that these big funds that are coming in and buying residential properties, right? And for the most part, it's pretty absurd, because when you look at CMHC's programs for building right now, like you can build a $5 million apartment complex at 95% loan to value, so 5% down with a 50-year amortization. These big funds aren't going to come in and buy up all these properties in cash. If they see an opportunity to buy, to build and do it with a ton of leverage, well, knowing that they've got the backing to support that leverage, they're probably going to end up doing things like that. As far as like buying investment properties, did you guys see, here, I'll pull it up here. I don't know if you guys can see this real easy, but this was Bank of Canada. It's a staff analytical note, so this doesn't really hit the news too much, but you can go to the Bank of Canada and you can look at all of their research. This came out a few days ago, and they're talking
How did you share your screen without being the host?
He just flipped his screen.
Tricks and magic for that.
He didn't share it. It's instead of him.
So if you look at this chart, and hopefully you can see it okay. If you look at this chart, this is like how much housing prices increased relative to how far away from the central core of a city people were. And what you saw is you see these huge run-ups in prices during the pandemic, between 50 and 75 kilometers away from downtown cores. Mm-hmm. And then if I can get down here real fast, this is the price premiums in the blue lines, the price premiums in 2016 for downtown core. So if you bought 80 kilometers away from a downtown core, you got a 35% discount on those prices. Now in 2021, you get a 10 or 11% discount. I have a feeling that this gap is going to re-widen. So, you look at downtown Toronto, you look at places close to universities, you look at the areas close to hospitals, you're going to see those prices remain high, but everything that is further out from there is probably going to start to see a little bit of pain. So could you buy an investment? If you were going to buy an investment, could you buy it close to a downtown core? Yeah, that might be the place to buy it, but I don't know. I think you probably want to wait 3 to 6 months to see how the market's handling these higher interest rates.
I agree. And I think there's going to be a lot of people waiting 3 to 6 months to see what happens. And where are people putting money right now? If you're in the stock market, unless I guess you're buying into stuff you really believe in right now, and you're one of the brave ones that rushes in. I
had someone come to me yesterday with some ideas, and they were like, we want to invest. And so they had a $400,000 budget, and it was like, here are your options. And I said, these places are all trash and they're not good investments, and you can end up losing a lot of money if you went into them. And I was like, you got some great GIC options, some mutual funds, some bonds. I said that might actually be where to put your money right now, because they need to buy within the next couple of years. And I said, just let's revisit this in 2 years. Your income will be higher. You'll have a bigger down payment. I said, go find a basement apartment, settle down. I said, just go to buy some $385,000 condo in a building that is lousy, is not a very safe investment. But really, what else is there? There is no other options, Darryl.
You talk to people that say it's going to be like a 1980s Volcker style, crazy, deep, long, high interest rate recession.
Yeah, and I don't think that's the case, because I love how guys will go into the comment section and be like, read up on Volcker, read up on this. And it's like, yeah, you read
got
the
that
one
too?
line that said interest rates went to 5%. Congratulations. But
Yeah.
when Volcker increased interest rates by 5%, yes, there was a whole bunch of oil and energy stuff that was happening, but there was also a ton of productivity in the US economy at that time. And there was homegrown inflation, which is why they did what they did. The inflation now isn't necessarily homegrown. And and by the way, interest rates were at 10 to 15%. It was definitely not a liquidity trap at the time when they did that. And they actually had some control over the money supply, which I'm thinking that we don't have at this point now.
It is a totally different
Who
environment.
was the
And
other one? Taylor? Was it Taylor that they bring up?
Taylor
another
rule, the Taylor
Yeah.
rule. But hold on a sec. So I don't disagree with you. But what I do find from the people in the comments and the anonymous people on Twitter and the people that think they know, there seems to be an age difference. And I'll be honest with you. I mean, I lived through, well, I barely lived through 2008, 2009. I got destroyed financially. So I have, seen a down market that was very destructive, at least to me. But I've never been in a business environment personally where inflation was a factor, where there has been a world war going on. And we're coming off the heels of that word that we shouldn't say so that we keep getting lots of views, right?
Mm-hmm.
How do guys like us, who are thankfully younger than the guys in the comment sections who are very bitter about their experience in the 90s and 80s, how do we know we're right? Because we are missing a valuable component to the stew.
Yeah, so I mean, I don't think any of us know whether or not we're right. And I can tell you this, like as an economist, having studied the financial markets of the 70s and the 80s and going back to the early 1900s, where we're at right now is unlike any position that we've been in the last 100 years. Like we've never had a pandemic with a war happening at exactly the same time, with ultra low interest rates, with
Supply
a
issues.
global supply chain, in the 1920s when we had the Spanish flu, 1918 when we had the Spanish flu, didn't exist. So how do you look at the 1920s as a comparison to that? The only thing that right now has in common with the late 1970s and early 1980s is inflation. That's it. Like that's the one thing. So
Agreed.
You can't go and I get why guys are going and pointing to the 1980s and going, remember this, we're going to see interest rates go up a ton because this is what happens when inflation happens. They're pointing to one aspect of a bigger picture. The only thing that worries me about that 1970s, 80s picture relative to now is that the guys that are running the central banks were all around during that 1970s and 1980s area, and they remember the pain and they remember what was done to fix it. So they may have a tendency to do the same thing. And then the question will be what will be telling is what happens if they do the same thing. Because I have a feeling that the outcome won't be the same as what it was in the 1970s or 1980s.
Mm-hmm. We've talked a lot here, Nolan, and we could do this all day long. And we want to make sure that you can get out there and start getting some more mortgages for people. Further to your point, name 2 decades in the last 100 years that were exactly the same economically, right? Doesn't exist.
Yeah, exactly.
Plus,
right?
There's a ton of technology that's coming down the pipe now that's just going to change things so drastically that, like, even if you probably can't really
you can
picture what the heck's coming down the pipe. So thank you again for your time, sir.
Amazing.
We appreciate it. We have the GOAT of
My
Canadian
pleasure.
real estate YouTube on with us again.
YouTube
We didn't scare
superstar.
him off the first time. This is amazing. This is amazing.
I'm honored that you call me that, but I don't know.
The privilege. Next time we will make sure you have your crown on for the entire
all areas.
telecast.
All areas of his life are just full steam ahead right now.
There's lots of people coming for me. I know that for sure.
That's it. We're
You guys are doing a great job, and as are a bunch of the other guys that you're having on. So, it's cool to see that we've got this awesome community built, and everyone's doing the same thing.
We're all working together, right? So
totally.
We will post your links below for anybody interested in dealing with Mr. Nolan directly. Thank you to everybody watching. Mr. TK, always a pleasure.
sayonara.
Sayonara, baby. This episode is brought to you by Landlord.
This landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer.